Good morning and welcome to today's webcast, 501R Tax Compliance and Internal Controls. Before we begin, I'm going to play a brief housekeeping video.
Welcome, and thanks for joining us. We're pleased to present another in our ongoing series of continuing professional education webcasts to help companies and individuals conquer challenges as they plan for what's next. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget to the right of the slide view. You can ask our presenter questions during the webcast by typing a question in the Q&A window below the slide view and clicking Submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% of the polling questions, which we'll ask throughout today's presentation. To respond to a poll, click the button next to your answer. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget to open a PDF file that you can save to your computer. Don't worry if you can't download your PDF certificate today. We'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our attendance sheet to receive CPE credit. The attendance sheet is available in the slide deck and handouts widget. Please have all group members sign it and send only 1 sheet per group. Also note that CPE credit can be awarded only to participants registered as themselves and isn't available to participants who view the on-demand version. As a reminder, the presentation you're about to see isn't legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
I'm pleased to introduce today's speakers from Moss Adams, Mary Wright and Colleen Ramires. Mary has over 20 years of public accounting experience and has been with Moss Adams since 2001. She works with collaborative teams to provide integrated internal audit, external audit, and tax and consulting services. As an audit specialist, Mary focuses on working with healthcare organizations to manage operational, financial, and compliance risk. She is an active member in HFMA, AHIA, AICPA, and the Washington Society of Certified Public Accountants. Colleen works with numerous not-for-profit healthcare entities with a focus on hospital organizations. Her experience includes planning, research, compliance, and consulting in areas such as the Affordable Care Act, unrelated business income, employee benefit reporting, and exempt status structuring, application, and maintenance. She has helped several hospital organizations with 501R reporting, compliance reviews, internal revenue service exams, and other consulting projects. And with that, Mary, I will turn it over to you to get us started.
Great, thank you, Emily. Ultimately, today we want to leave you with 501R work plan and internal control considerations, but the focus is more about the items that are listed here. So what's critical from a 501R requirement standpoint? What has gone wrong for other organizations? And finally, what has the IRS been focused on lately? We want to arm you and your team with enough information to be able to confidently monitor the various departments that touch 501R and help safeguard your organization. Starting with scope and timeline, we will confirm who this applies to and discuss key dates. We will also touch on state laws and regulations related to charity care in this section. There is often confusion when organizations have to deal with both 501R and state regulations, so we wanted to provide some clarification on that matter. Colleen will cover the next 3 bullets, which are the IRS Exam Activity, compliance highlights, and finally errors, omissions, and failures. As noted previously, the body of this presentation is focused on getting the critical issues straight from the tax expert so that you and your team can focus on the monitoring process and focus truly on the right things that are the highest priority. Finally, we will pull things together by outlining a process that you can use as a starting point for building a new 501R compliance work plan or augmenting what you already have. We wanted to start with timeline and scope to make sure we're all on the same page. 501R relates to all tax-exempt hospitals with 501(c)(3) status. That's an important clarification. The big picture requirements are included here. You need to conduct community health needs assessment every 3 years. You also need to formalize process procedures regarding financial assistance, billing and collection, and emergency care, which definitely includes specific requirements. A little bit more on scope and timeline. The key takeaway here is the effective date of the final regulations, which was for 2016. So for those of you on this presentation that feel like this is a risk area you've been tracking for far longer than 2016 timeframe, you are correct. You can see the dates here related to the proposed regulations, and effective dates for various 501R components came much earlier than the final regs in 2016. One other item I wanted to highlight here is the 501R related terminology. You're likely already familiar with the acronyms for financial assistance policy, amounts generally billed, extraordinary collection actions, and community health needs assessment, but we just wanted to include it here just in case. Also, some of you may be wondering, if this has been in place since 2016, why exactly are we talking about it again now? So one of the main reasons we felt like this was a good presentation topic came out of a conference that Colleen recently attended. I don't know if I have the words exactly right, but the messaging was that the IRS is shifting out of education mode with regards to 501R, and their expectations are higher now for compliance. So Colleen, do you have anything else to expand on that?
No, not much. You kind of hit the nail on the head of we've seen exams happening in the last year and a half or so, and the conferences I've been attending, the IRS representatives are saying it's still a focus, and they're going to be a lot more stringent, and there's going to be less leniency. So it's good to hear the information again.
Good, thank you. As promised, we wanted to briefly touch on state charity care laws and regulations. If your organization operates in a state that this applies to, it's very common for people to confuse the state laws and regulations with the federal 501R regulations. The key takeaway for those that this applies to is that in some cases, 501R is more stringent than state laws. It can also be less stringent, or it can just flat be different. So both state laws and the 501R regulations must be evaluated separately. It is really hard to get a one-stop shop for guidance for all the states that this applies to. The resources generally note that there are a few states that charity care laws and regulations apply to. But an important clarification is that those general resources are typically referring to providing unconditional, free, or discounted care. What you miss with that type of general analysis is all of the other charity care related requirements that may apply even if the state doesn't require free or discounted care on an unconditional basis. So a lot of information here. We'll tease this out with some examples, but I wanted to at least set the stage. If your organization is in one state, our advice is to make sure you're verifying if there are any state-level charity care laws and regulations. Compliance with 501R and compliance with state regulations, as I noted earlier, can be different. So you need to go into that with that assumption in place. Finally, it goes without saying, if your organization operates in more than one state, the risks associated with compliance with state regulations may increase depending on what each state requires. What we included here is a summarized snapshot of states that require hospitals to provide unconditional charity care. There were only 9 states as of 2016 that were required to provide unconditional charity care. This table doesn't replace the need to research, but it gives you an idea of the variability of the requirements and who this applies to. A few additional notes: this does not include all charity care requirements for the states listed, and it also does not include states that have conditional requirements to provide charity care. An example of a conditional requirement is when a requirement is related to a certificate of need, or perhaps a hospital's state tax exemption is conditioned upon them providing discounted or free care. If we include conditional charity care requirements, there would be 16 additional states that are included in the list here. The final clarifying note here: while there are some states that do not require hospitals to provide charity care, in many of those cases there are other related requirements hospitals must comply with, like having a financial assistance policy or adhering to limits on billings and collections. I believe when I last counted, there were only about 10 states that had no requirements, so it's good to double check. To give you some background on the columns on the table, let's walk through Washington, for example. They are in this table because they have laws that require hospitals to provide unconditional, discounted, or free care. Walking through each of the columns, the first column tells us if there are related reporting requirements. Second column, this means that Washington hospitals must have a policy to govern when charity care is provided. The third column notes that there are rules about how the policy must be disseminated. For example, when the policy must be communicated and in how many languages must it be translated into. The fourth column, the state of Washington also requires that hospitals determine the needs and the priorities of the population that they serve. For this state, this applies to all hospitals, not just not-for-profit hospitals. So that's a really important clarification in the situation for Washington, for example. Finally, the last column, there are regulations in Washington that do place limits on charges, billings, and collections. Some of the most recent news in Washington, for example, has been in the area of collection practices and the allegations made by the state attorney general that certain hospitals were not following the law as they pursued collections from patients. So you can see that these issues not only relate to compliance risk, but they also relate to reputational risk. All right, we'll transition back to Colleen now and 501R federal regulations.
Thanks, Mary. So first we'll cover IRS examination, but before we start jumping into that, we will have our first polling question, and I will turn it over to Emily.
All right, our first polling question: has your organization received an information document request from the IRS relating to 501R compliance? And your options are yes, no, I don't know, or it does not apply. And I'll give everyone a few moments to make a selection. To participate in the polls today, please click the button next to the answer you choose and hit submit. A few more seconds here. And let's take a look at the results. Colleen, back to you.
Thank you. So some of you have, several of you haven't, some of you don't know. So yeah, I mean, we are seeing that the information document request, and essentially what that is that notification that they're requesting information because the organization is under exam related to 501R. So with IRS Examination Activity, it's part of the IRS's work plan. It's part of the 2017, and it's actually also now part of the 2018. The work plan is something that the Tax-Exempt and Government Entities Division puts out every year.
It covers the IRS's focus in each function of the division, and it includes exam focuses. 501R compliance has been an emerging issue on both work plans, so it's something that they're definitely focused on. As of October 2018, they opened more than 400 exams, of which just over 200 have been closed. So it is taking quite a while for the IRS to close out the audits. A lot of it has to do with their resource restrictions. So conducting the audit seems to go fairly decently, but then their time to kind of assess all the information takes a while, and then just closing it out, getting that final approval on the agent's determination is taking quite a while. Last year we saw the examination focus mainly being on 2014 returns. Something to note there, for the 14 returns, the final regulations weren't actually applicable, but we did see a lot of IRS agents focusing on that. And it was more because at that time the IRS was just trying to help with educating and helping organizations get into compliance, knowing that with the final regulations coming, exams going forward are going to be more on a regulatory basis versus educating basis, as we mentioned before. Also, financial assistance policy and then community health needs assessment were the two main areas that they were looking at, but we did see exams that were focusing on all aspects of 501R. So the exam selection methodology, with the IRS resource restrictions, it's focusing on using statistical models and data analytics. They're reviewed, and then from that they're referred for exam. The referrals are also coming externally, not just internally from the IRS. When the IRS is reviewing to see if it should be referred for exam, they're looking at organization websites. They're seeing if the required items need to be posted, which we'll go into later. They're reviewing Schedule H. And then they also have said that they'll do on-site tours. I haven't heard of any on-site tours being conducted. However, they're not going to announce if they're doing that, so it could be happening and they're just not notifying. So if an organization is pulled for examination, the procedure is first you'll get that information document request, or the IDR as we acronym it. So the documentation that they'll usually ask for, policies, billing statements, board committee meeting minutes to see if things have been approved. They will verify information on the 990 Schedule H, Part 5, Section B. They're going to verify that the documents they're pulling are in agreement with what was reported on those. They're going to interview people that have familiarity or responsible for the FAP, billing and collection practices, computation of amounts generally billed, and the community health needs assessment. They may make arrangements for an on-site tour. Again, I haven't heard of that or seen that happening very much. They'll also ask if there's been any complaints filed related to financial assistance or billing procedures. We haven't really seen the IRS verifying with the state if these are happening. They're more just asking the organizations directly to provide any information. So possible consequences from noncompliance. If a community health need assessment is not conducted correctly, there could be a $50,000 excise tax. Overall, with all of 501R, a facility could become temporarily taxable. That would mean that the whole organization still has its C3 status, but that specific facility and any income and expenses related to it would be subject to tax. Also, revocation of organization's tax-exempt status. With that, we're mainly seeing that if there's willful or egregious negligence. So if your organization is making attempts and to follow 501R and has policies and procedures in place, you're likely not going to trip revoking the IRS or the 501c3 status. And then also, if it gets out, there could be negative press. And really quick, by the end of 2017, the IRS has said that they made 33 assessments imposing the $50,000 excise tax. So some common pitfalls.
One, what we're seeing the most is that the CHINA report and the policies are not on the website. This is likely, I mean, this is going to trigger an exam almost always. Another item is if Schedule H, if the information provided suggests deficiencies on Schedule H, or if it's not agreeing with the reports and policies they're able to pull. Or there might be missing items. So the plain language summary of the financial assistance plan, translated policies, calculation of amounts generally billed, or a list of providers covered by the financial assistance policy. And we'll go more into those requirements soon. So future IRS examinations, like I said, it's also included in the 2018 work plan. This is where, a lot of organizations have done their second or third community health needs assessment in 2016. The final regulations were in place, so there's more definition on what's required. And then there's also been time to get acquainted with the requirements. Also, the IRS and Department of Health and Human Services are required to report to Congress data on tax-exempt hospital organizations every 3 years, so they have to be looking at this information. And from the conferences I've been at, I've been to one in the fall and then this past spring, each time IRS representatives were there, and I mean, they're mentioning it and saying this is going to continue. And as we've mentioned a couple times, we're moving from educating organizations and helping them get into compliance to regulating this and enforcing the compliance. And with that, we'll go on to our second polling question.
All right, our second question, do you know if all of the required 501R documents are on your organization's website? And your options are yes, no, or I don't know. And I'll give everyone a few moments to make a selection. And as a reminder, if you would like to receive CPE credit for today's webcast, you will need to respond to at least 3 of the 4 polling questions. We are on our second question. And let's take a look at the results. Colleen, back to you.
Awesome. So a lot of you have the documentations on your website, and that is good. Those of you that don't know, I would go check your website after this presentation. So we're going to go over compliance highlights. We're going to summarize, and we're going to go through these fairly quickly. There's a lot of detail. There's a lot of requirements, and they get very specific. So if you have further questions, feel free to ask those in our questions Q&A section, or feel free to send it and follow up. So first, going into the community health needs assessment, these are the requirements that need to be done or need to be included in the report. The community, with the final regulations, it provided flexibility on how an organization can define their community. It cannot exclude those who are medically underserved, low income, or the minority population. Detail on how the organization defined its community needs to be included in the reports. For the evaluation of impact of any actions from the most recent CHNA implementation strategy, there needs to include rate and comments received, or the organizations can do a survey to get that information. Identify, evaluate, prioritize, and address significant health needs. It doesn't have to be about specific medical issues. Definitely want to look at those, but it also can be about barriers to accessing care or social or environmental factors that influence health. Input from persons representing the community, it needs to be a broad interest. It must include members of the medically underserved, low income, and minority populations. And it can also include others in the community that aren't necessarily health organizations, so other not-for-profits, academic experts, healthcare consumers. As far as those with special knowledge or expertise in public health, the regulations state that at least one state, local, tribal, or governmental public health department or equivalent needs to be involved. For documentation, essentially all of this information and how the organization went about obtaining it needs to be there. And then finally,
the report must be made widely available. It needs to be provided if it's requested. The main thing, as I mentioned, and I'll mention this several times, it needs to be on the website. Both the current one and the prior one need to be on the website. And technically, the community health needs assessment is considered to have been conducted when all of these steps have been completed. So if you go through and do all of this, you put together the report, it's been approved by the board, and it doesn't get on the website, technically it has not been completed. So making sure it's on the website is very critical. So once the report is done, then the organization needs to come up with an implementation strategy of how it's going to address the health needs. It can also identify health needs that it may not address. Either there's not resources that the hospital has or the organization has that it can address those, or there may just be several significant health needs and the organization feels like they really want to focus on just the top couple two. In doing the community health needs assessment and implementation strategy, you can team up with other hospital facilities. You can collaborate, and that usually means you have similar communities, identical sections, but you would have separate reports. You can also do joint reports. It means that there's the same community, one report, although it must be approved by each organization's board, and it must clearly identify as being applicable to the hospital facility. You can also have a joint implementation plan. You don't have to do a joint CH&A in order to do a joint implementation strategy, but then it needs to be in a separate report. You need to help the reader easily locate the portions of the implementation strategy that relate to each facility. You need to identify the facility's role and responsibilities and the resources that it can provide. Also, if there's a newly acquired organization or hospital facility or a new organization, there's additional time before that CH&A has to be done. So with that, it's very important to be cognizant of partnerships and joint ventures. If you have, let's say, a 40% interest in a joint venture and then it changes and then you have like a 60 or 70%, if that partnership holds a hospital facility, a hospital license, going to that 70% is now going to trigger the requirements for that hospital facility to comply with 501R. On the financial assistance plan, there's specific, it needs to list the specific eligibility criteria for all types of financial assistance. It must apply to at least all emergency and other medically necessary care. It needs to have the basis for calculating amounts charged. If assets are taken into account, specific asset eligibility limits for each type of financial assistance needs to be there. Medical, indigency, and hardship eligibility criteria should be specified and not discretionary based on facts and circumstances. It needs to list the sources that the hospital uses, method for applying for assistance. And another key one is list all providers delivering emergency or medically necessary care. This is one that the IRS has specifically mentioned at the conferences that is getting missed or is not being provided with enough detail. The list can be provided separately as it does need to get updated on a more frequent basis. It just needs to be mentioned in the financial assistance plan of where that list can be obtained, and it also needs to be widely publicized, aka it needs to at least be on the website. If the emergency room is outsourced to a third party, it may not be considered to operate, and it's not covered under the financial assistance plan, then it may not be considered to operate under the community benefit standards. Some additional financial assistance plan documents that need to be done is financial assistance applications, financial plain language summary,
And then also it needs to be translated into the language of limited English proficiency, and that is the lesser of 1,000 individuals or 5% of the community served. And this is one where you want to watch out because it may be different than the state requirements. I know in relation to Washington, this one is more stringent than the Washington requirement. All of these must be adopted and authorized, or must be adopted by an authorized body of the hospital facility. Usually that's the board, but the board could authorize executive management to adopt it. And the approval should be documented because if there's an exam, this is one of the things the IRS is going to request. For publicizing, you want to make sure the plain language summary is offered as part of either admittance or the discharge process, so provided by at least the time that the patient is discharged. It also needs to be included in billing statements, and a phone number needs to be provided for of who can be contacted for more information. So limits on charges, this is referred to as the amounts generally billed. So for medically necessary care, you can't charge more than amounts generally billed. For other medical care, you can't, it just has to be less than gross charges. There's two methods that you can use to determine AGB. Prospective Medicare or Medicaid method, which essentially means you would use the normal billing codes. You would use the normal amount that would be reimbursed for those. Or there's the look-back method, which there's 3 different versions. It's a combination of just Medicare, Medicare, and private insurance, Medicare, Medicaid. So there's different combinations that you can do. If you do that method, you do have to disclose the calculation of how you came up with the percentage, and that also it needs to be on the website. It can be in your financial assistance plan, or it can be in a separate document. There are safe harbors in case there's charges in excess of amounts generally billed, and that just means that payments not requested as a precondition for services, refunding amounts to FAP eligible patients, and making sure that a completed financial application has been provided. Also, one quick note on the billing statement. You can start at the same gross charges that everybody would be billed at. It's just that the final charge needs to be less than the amounts generally billed. So with the billing and collection policy, that mainly relates to extraordinary collection actions, or ECAs as we call them. So this is a list of what the IRS considers to be ECAs, and then there are a couple that are excluded from being considered an ECA. One of the ones I will just point out is placing a lien against third parties that caused the patient's injuries. So generally, like if there's an auto accident, then you can place that lien if needed. So before any ECAs can be taken, there needs to be reasonable efforts to notify the patient and to see if they qualify for financial assistance. One way you can do this is do a presumptive financial eligibility determination. There's also notification and processing requirements of the application and specific time requirements on notification. So 120 days from the first post-discharge billing statement is provided. You have to wait at least 120 days before you can start talking to them about doing extraordinary collection actions. If there's an incomplete financial assistance plan, you need to notify and provide a reasonable opportunity to complete. Notifications considered, you're providing written notice, you're providing the plain language summary. You need to provide notice of an ECA that is going to be initiated and the deadline after which that will be initiated. You need to provide that notice at least 30 days before the ECA is taken. Making an effort to orally notify is good to have. And this is applicable to each episode of care.
If an ECA is initiated and then a FAP application is provided, the ECA needs to be suspended until a determination is made. It is possible to hand over, once you do the ECA, and if you're handing that over to a third party, you want to make sure that there's an agreement in place, and it must be reasonably designed to make sure that there's reasonable efforts taken and include specific provisions regarding suspension and reversal of ECAs. Merely stating that the third party must comply with 501R without specifying the requirements is likely not going to be sufficient. And if all of this information is included in a separate billing and collection policy, that policy must be widely publicized, so it must be on the website. With that, we will move into our third polling question.
All right. How confident are you about your organization's compliance with the final regulations? Are you very confident, somewhat confident, not very confident? What final regulations? Give everyone a moment to make a selection. And for those of you that would like a copy of today's slide deck, you can download them now from the folder that says Slide Deck and Handouts to the right of the slide view. We will also be sending the slides via email after the webcast. Everyone, a few more seconds here. And let's take a look at the results. Back to you.
Good. So most of you answered very confident or not confident. The 2%, what final regulations, I apologize for boring you. But it looks like a lot of you are good. For those that said not confident, definitely reach out to us, reach out to your tax advisor, and have them help you kind of assess and see where maybe some things could be addressed. So we went over all the requirements. You go back and you analyze that with where your organization's at, and you realize, oops, there's been some errors or omissions or some failures. What do we do with that now? Some noncompliance is going to be inevitable. Like I've mentioned, there's so much to 501R, and there's things that get so specific, it's easy to miss some of them. An omission or error is not a failure if it's neither inadvertent nor due to reasonable cause, and there's prompt correction. If an error is neither willful nor egregious, it may be excused under certain circumstances. If it's promptly corrected, if it makes the disclosure needs to be made on Schedule H, and then policies or procedures may either need to be updated or established if not already. And then this is just kind of an overall summary of with what you may be dealing with on the left-hand side and then possible consequences. Minor errors and omissions, the IRS didn't very clearly define this. They said it's based on the size, scope, nature, and significance of the error or omission. Also, they look at it in aggregate, so if you have a minor one with community health needs, you have several minor errors with your financial assistance plan, and looking at all of those together, they're not minor, then they would fall into the next category. Inadvertent, it means that there isn't a history of making that error or omission. Once it's found, it's corrected, and it's not a continual issue that's going on. And then reasonable cause, if there's established practices or procedures that are designed to promote and facilitate compliance, then the IRS will consider that the error was based on reasonable cause. And with that, I will pass it over to Mary.
Great. Thank you, Colleen. Before we talk through creating a 501R work plan, we want to start off with a polling question. So I'll pass it back to Emily here.
All right. This is our fourth and final polling question. Has your organization implemented procedures for overseeing 501R compliance for detecting, correcting, and disclosing 501R violations? Yes, no, I don't know, or does not apply. And once you have completed all CPE requirements, you will be able to download a PDF of your CPE certificate from the certification widget, which is to the right of the slide view. And let's see what everybody had to say. Mary, back to you.
Great. Good news there. There's a lot of yeses out there at 43.8%. That's fantastic. What we're hoping to accomplish in this last session will help just verify that you have in place what you need. For those that aren't in that boat, hopefully this can give you a good outline of a process that you may want to try to implement in your organization. So with that, we'll forward on to the internal control and work plan considerations. As a reminder, we are clearly focused on 501R regulations today, but as Colleen mentioned several times, and I also mentioned at the beginning, you could also use these considerations for state charity care laws if those apply to you. So keep that in mind. While this is a focus, it definitely could apply to both. So there are three basic questions. Who needs to be involved? What are the key objectives? And how do you test? From a team perspective, one thing that we wanted to start off with is who is responsible. Now, what you'll find and what you may already expect is obviously this is a very diverse team that needs to be involved with compliance for 501R and the monitoring of that compliance. But we also wanted to mention that officially, per your 990, the principal officer is the one that's going to perhaps receive any sort of inquiries or exam requests. So that technically is, in a lot of cases, going to be that first contact or that first individual that is going to receive requests. However, that person's absolutely got to be supported by many others, as we will discuss here. So starting at the top, revenue cycle plays a very important role, especially related to the billing and collections and the financial assistance policy. One of the maybe less obvious team members in some organizations may be the IT department. They're often going to play a role in ongoing compliance. For example, are they responsible for loading the public information? And are they responsible for making sure that the links to the most recent documents are working, for example? 990 preparation usually involves the finance and accounting department. So obviously, your CFO and finance and accounting will be involved for sure. And legal will also likely be involved from a compliance and an ongoing monitoring standpoint. Also, who is the individual or group of people involved with gathering your community health needs assessment information and ensuring that the public communication is happening as Colleen outlined? They absolutely need to be a part of this team. Finally, as an important ongoing assessment is making sure you're thinking about whether there are any gaps in your resources or your expertise. Organizations may conclude that they need outside assistance with anything from policy development and review to testing current practices and perhaps even IRS examination support. This is where we as a firm sometimes get involved as generalists from a finance support perspective, as tax specialists, revenue cycle specialists, or a combination of all those things. Once you have your team in place, it's time to outline the key objectives. The most common are listed here. First, obviously, if there is a compliance issue, and Colleen just walked through this, the key objective would be to detect it internally in a timely fashion, correct that issue if it's required per the regulations, and then walk through the steps per the applicable regulations to ensure proper disclosure of that issue. After making sure you're in compliance, the second objective is going to be to monitor that ongoing compliance. And then finally, regarding audit or examination readiness, Simply put, proactive preparation is a much better approach than having to react when requests come through. So great to know where your organization stands in that preparation area. All right, testing. Final slides of this section address the question of how we're going to test this, or said another way, how are we going to verify and validate that the objectives that we just walked through that are critical to our organization are being addressed properly. To start, map out those deadlines and get to know the requirements or ask for help confirming those deadlines and build your work plan from there. Remember, we're dealing with examination readiness, ongoing monitoring of compliance, and timely detection of issues. Each of those timely considerations have something separate to think about there. So kind of keep those in those separate buckets. What would regulators do if they're examining your organization? Consider walking through your hospital and assessing compliance. As Colleen mentioned, we haven't heard that this type of thing is going on yet, but obviously it would be great to make sure that you're prepared. This is most important in admissions and your emergency room. This type of procedure will require a deep understanding of what's required for the regulations before you get in there and try to walk through an evaluation. Third step, again, just as regulators would do, test whether the required information is on your website. The testing, obviously, as Colleen mentioned several times, this is super important. We want to make sure we're reinforcing that. You could consider this perhaps a desk audit. You're basically using what's publicly available, not because you're inside the organization, but as if you are external as your initial point of review. You should have your community health needs assessment, your financial assistance policy in plain language, and all of the other things that Colleen had already mentioned. Next, fourth step there, you may want to consider selecting a sample of patient files. This is obviously going to depend on your situation and how far you think you need to take this validation and verification process. But if you do decide to take a sample and take a look at some of the patient files, you'll want to be looking for documentation proving that there's consistent application of your policies. Few more steps to consider for validation. As noted earlier, clear understanding of the deadlines is critical for this next step. Depending on the document, there are different deadlines to monitor for compliance. You'll want to make sure to schedule those compliance checks to make sure updates are made available and are effective in a timely fashion. And again, it does depend on the document, so keep that in mind. Number 6 there, while timely updates are important, it's also important to ensure the updates are approved by the board. So if you're not, even if you are witnessing this firsthand, you want to make sure that it's documented in the board minutes or in some other fashion. Colleen mentioned this before, but it bears repeating. Even if the policies are complete and made available in a timely fashion, if the proper approval is not completed and documented, the policy is not considered effective, unfortunately. And finally, once you have a solid understanding of the regulations, the final step is to perform a periodic review of your organization's audit or exam readiness files. So where are those files kept? Who is in charge of maintaining those? Obviously, getting ready for an audit before the request is made will help to monitor compliance and will also reduce that risk that an issue would be found by an external or an outside party. To bring it back full circle, this is what we wanted to accomplish with this session from a learning objective standpoint. And here are the key takeaways. First, use that information Colleen summarized to help ensure your team understands the critical 501R requirements so that your related internal controls in your monitoring processes can be as effective as possible. Second, knowing the issues that other organizations have encountered is absolutely key. We want to help make sure that you can avoid those if at all possible. third, because 501R touches so many different departments in your organizations, you can play an important role in ensuring that your organization has the right team in place. If in your circumstance at your organization, another leader in your organization is a better fit to be on point for this, that's okay too. But it's absolutely critical to make sure that the team understands and there's a clear documentation of roles and responsibilities. And finally, this issue is very deadline driven, so work backwards from those key due dates. Make sure your work plan checks for current compliance with enough time to address issues as necessary. And make sure deadlines are a key consideration in the organization's plan for future compliance. Here's our contact information, and before we pass it to Emily for Q&A, just a brief reminder to everyone, beyond webinars like these, we also offer a wide variety of other resources to help all of you stay on top of critical industry issues, so please feel free to use those. One of the resources that we have out there is we do hold an annual healthcare conference. The theme this year, and we're very excited about this, is Disruption, Innovation, Transformation. It's coming up in November, so it's a little ways off, but registration is open, so we wanted to make sure that you were aware of that. Emily, I'll pass it over to you for Q&A.
All right, thank you. So we do have some time for Q&A. If you have questions for Mary or Colleen, you can enter them in the Q&A window beneath the slide view and hit submit. And the first question is, what is the logic behind having the board approval?
So I'll take that question. I think the IRS's intention with that is because it's such a heavy matter for them. I mean, Congress put this into place because they wanted to say, I mean, their main focus was tax-exempt hospital organizations do not need to pay taxes, and there are other organizations that provide similar services that do pay taxes. So these requirements are essentially their safeguards putting in place of why the hospital organization has its not-for-profit exempt status. Also, it's kind of, with the documentation, it's kind of a time stamp. So with the community health needs assessment, with the implementation strategy and the deadlines for those. And I don't think I mentioned on the implementation strategy, that needs to be put in place by the 15th day of the 5th month after year end. So if you have a calendar year end, it needs to be put in place and approved, is what I mean by put in place, by May 15th. So it's kind of a time stamp for the IRS to see when it was done. It also shows, I mean, the board is responsible for governance and making sure that the organization is doing what it should be doing. So I think that was kind of the IRS's intention of this is an all-in organization thing. As Mary's mentioned, there's a team that needs to be involved with this. So having oversight from the board or board-authorized individuals is why the IRS has put that requirement in place.
Great, thank you. Can you repeat the language or population threshold for the need to translate?
Yes, so it's the lesser of 1,000 individuals that speak a different language, or 5% of the community served. So with this, trying to assess 1,000 individuals within the community, you can look at consensus information, demographic information that you can find, but also, just kind of every hospital organization has somewhat a sense of the, population that they're serving, so just kind of taking that into consideration.
Thank you. And is there a geographic range criteria for the list of providers offering emergency care and medically necessary care? For example, for a rural hospital, the closest provider may be a ways away.
No, it's just related to providers that are providing services at the health hospital facility.
For joint ventures, did you state that when a hospital has 70% or more interest, there is a CHNA requirement? I thought it was 51%. Is 70% the stated guideline?
No, it is 51%. I was just using 70% as an example, but yes, 51% or above. As soon as the tax-exempt health hospital organization is considered to control that organization that has a facility with a hospital license, that triggers it becoming subject to 501R requirements. Again, with that, a lot of the financial assistance plan, those documentations and policies, you can have it. You don't have to create a new one for that new hospital facility in the partnership. You can have it apply to both. It just needs to clearly state that it is. And then also, if you just did your hospital organization's community health needs report, there is some time for the other one to do it, but it's likely going to happen before the hospitals come up again. So you can either do a separate one, or you can do an early one and do a joint together, especially if they're within the same community. Yes.
All right. Can you discuss in more detail what exactly an on-site tour would consist of?
An on-site tour, so they're going to come, they're going to see if plain language summaries are posted. They're going to see how easily they can get a hold of a financial assistance plan, plain language summary. If it's translated, they're going to see if they can get a hold of the community health needs assessment. They're just going to assess to see how easy it is for patients and how to access this information.
Other than the actual regulations, what is a good resource to use to get clearance on 501R requirements, specifically notification and refund requirements related to using a propensity to pay tool?
That's a good question. I know I can't recall it off the top of my head, but I know that there are websites that are specifically related to the Affordable Care Act and the specific requirements under that and the timelines. So it would likely cover the 501R. We'll look into that further and we'll get you some of that information.
All right. Thank you. It looks like that is just about all we have time for today. Thank you, Mary and Colleen, for a great presentation. As a reminder, if you attended today's presentation in a group and would like to receive CPE credit, you must complete the group attendance sheet found in the slide deck and handouts window to the right of the slide view. If you participated as an individual and met all certification requirements, your certificate is available to download now in the CPE progress window to the right of the slide view. I'll keep the webcast console open for a few minutes to give you time to download your CPE certificate. A copy will be emailed within 2 weeks should you have any difficulty downloading it now. Here is a link to an online survey where you can provide feedback for today's presentation. Please take a moment to complete this survey as your feedback is very important to us. Thank you for joining us today, and we hope you'll join us again next time.